Students, this problem is to help you in FR2 with a warranty problem. So this is in your class pack solutions if you're looking for something to maybe try yourself and then come back to this video. So let's look at the information. Madison sells merchandise for $250,000 during the year along with a 2-year warranty for the current year and the following year for $25 a product. Now notice this. They're charging for this warranty. So we know we're going to have some type of deferred revenue because it's over the warranty will cross 2 years. If the warranty was instead embedded in the price, then we would need to go ahead and make an accrual for that future warranty expense because we weren't going to get any more revenue in future years. We've gotten the revenue all this year, and so we needed to go ahead and recognize the fact that there would be expense. This one, we've got revenue coming in over 2 years, and so it'll be fine for the expense to come in over 2 years. So let's start with A. Record the sale of merchandise and warranties, ignore cost of goods, and we can assume cash. So for A, I'm going to debit cash, $250,000. I'm also going to, let me change this so that's not going to, I'm also going to debit cash for the warranty money that folks gave me. Oops, debit cash. And it told me that I sold it for $25 per product. The company sold 2,500 of warranties during the year. Okay, so that means I got 2,500 more in cash. Now, how do I finish this entry? I need a credit. Well, we know we've got sales revenue for the $250,000, but I can't necessarily just call that warranty money that people have given me revenue immediately because it's going to come into revenue over 2 years. So instead, I'm going to put it as a liability for deferred revenue, and that's the $2,500. All right, now we're still in the same year, so I'm doing letter B, and we've actually had some costs come in. So we incurred actual cost of $800 during the year related to the warranties. So remember, we got $2,500 in that'll cover 2 years. In the first year, we're going to go ahead and record our expense. So we're going to debit warranty expense for $800 and credit cash. We're going to assume that we paid cash for those expenses. All right, now, good news is I'm at the end of the year and I've earned half of this $2,500. So I'm going to debit the deferred revenue. Half of that $2,500 is $1,250, and I will credit warranty revenue. $1,250. Why is this okay? Why did we not have to incur a liability? Because we're going to always record the expenses as they occur, and then we'll record the revenue as it vests, right? So we've got revenue of $1,250, we have expenses of $800. If instead, again, that $250,000 had given people a warranty for 2 years and we weren't going to get any more revenue, right? Because they weren't paying us extra for it. Then I would need to establish a liability and use that liability as I paid out expenses. So there's 2 different types. Remember, this type is a service type. The other type is an assurance type. So try to practice them both and make sure you understand the differences.